All right, ladies and gentlemen, welcome back to another episode of the Bottom Line Podcast, where we say what we mean and we mean what we say, because at the core of everything that is, was, and forever will be, there will always be the bottom line. Today's guest this is actually part two of my first interview with Mr. Alex Leykind. Alex Leykind and I spoke a while back. I forget what episode number it was, but we touched on a little bit of, a lot. I want to keep in mind also that when I talk to Alex, a lot of it is him educating me about what's going on in the lending space, right? And I think we all need to have that expert in our corner, that if we don't know the inner dynamics of a particular industry or a sector, call on that person that you think, can explain it to you. Because at the end of the day, there's nothing worse than taking your foot out of your mouth, right? So Alex Leykind is the founder and managing director at Equitas Capital Group, where he focuses on commercial real estate loans and market capital, right?
Yes, sir.
Sir, Alex, how you doing, man? How have you been since we last spoke?
Doing great. Keeping busy. Thank you so much for having me back. It's an absolute pleasure.
Yeah.
Looking forward to this. Look forward to sharing some insights. Look forward to show and share what we've been kind of seeing in the marketplace, and hope we could be of help.
Yeah. So I was saying, it's what I'd like to do with you is help, re-inspire hope to New Yorkers, like the native New Yorkers, man. I think at the end of the day, I'm a Gangs of New York kind of guy, right?
That's right.
I watched that movie, and that movie, like, it explains a lot about the New York culture, the grit, right? And how we can come out of pretty much anything. And the thing that I think is important,
and we have many times.
And we have many times, yeah. And I think the thing that's important is, again, for us to be able to talk to the people who are inside, right, of the of what's going on in the markets, right? So I'm going to just give you a little bit of what I'm hearing, and any clarity on. New York will never be the same again. A lot of the billionaires and millionaires have left and relocated. People are moving out of the most affluent areas of New York. And a lot of New York's, economy is based on the commercial real estate. And, the businesses that are no longer there or are moving out, right? So how much truth to that is there, would you say, from your perspective, where you're at in this lending space?
I think it's a great question, and that's definitely something that's kind of been circulating in the headlines. I think the upper end of the spectrum, the ultra high end rich, are, looking for secondary residence elsewhere.
Mm-hmm.
But I wouldn't say that there's been kind of a mass exodus whatsoever,
Okay.
I think it's very segmented. I think that, the families that used to be stuck in a 2-bedroom apartment, or the guys that are moving to Long Island, I think it's more of a space, accommodation kind of thing.
Okay.
But overall, I think the commercial market has been very strong. There's a lot of activity, as lenders kind of keep piling back into the pool, when they're doing so more and more, every hour, every day, every week, every month, and opening up, different pools of money, opening up different loan products, because they see that, for the most part, even though it's, what you hear on the news, kind of the doomsday scenarios.
Yeah, exactly.
Listen, there's a lot of very, very strong borrowers who have very clean properties. A lot of our clients, God bless, have had 90% plus collections during COVID. And I'm talking about in different vertical types. So we're talking about from the industrial to the office to the multifamilies and so forth.
Mm-hmm.
And, there's that amped up demand that these guys saw that, they came out of the recession, interest rates are at historic lows, and the Fed just keeps pressing that button more and more every time. And people are being very active. That's on the investment commercial side. On the residential and the owner-occupied commercial side, huge activity. A lot of healthcare deals going on, a lot of attorneys, doctors, businesses that are, not every business kind of shut down. So a lot of businesses are looking to buy properties for themselves, and they're getting good deals. I think that it's not, and the good deals that they're getting, I think they're getting more from sellers that are starting to come down to reality. And, they're fair deals. I wouldn't say that someone's robbing the bank over someone else.
Right.
They're fair deals. People are
Right.
getting what they want at certain, realistic price points, and business is going on.
Yeah. So you're busy. You're in the office every day just about, right?
Yes, sir.
Okay. So that's what I kind of want to focus on a little bit too, is like, all right. And it's the lending space is pretty much what's going to, bring life back to the economy. I think anybody that's working as a lender right now, as a loan officer, we need these loans to go through, right?
Yeah.
Because that's we can make money. The country makes money off the interest rates, right? And you mentioned the Fed. So my understanding is that the Fed is actually supplying the money right now to the economy, right? And I hear mixed messages about the Fed is about to pull out, and there's going to be a market crash soon, right? Now, I don't know. It sounds to me like it's all speculative. But again, what I'm trying to figure out is how much truth is there to the fact that commercial real estate will never be the same again? Zoom is taking over for most corporations or most businesses. And you mentioned a particular subset of people that are buying right now, businesses. Is it safe to say that a lot of us New York itself would be able to make a comeback because of those people, those businesses that are buying? Or would you say, is it safe to say that realtors, loan officers, anybody else, that they're just going to be out of work because there's not enough potential here, and like as far as anybody buying properties? Are we
So,
out
I
of
mean,
work? Are realtors going to be out of work? Are loan officers going to be out of work? Is real estate going to just shut down altogether in New York, like Cuomo seems to claim?
so I don't necessarily agree with that point from Governor Cuomo.
Yeah.
Just based on the market that we're in, we're seeing a ton of activity on the commercial, on the residential side. Friends of mine that are residential brokers are telling us there's still bidding wars going on. They have 30, 50 people showing up to their open houses.
Wow.
So I think that I don't think realtors are going to be out of work. I don't think loan officers are going to be out of work. I think there will be a fundamental shift in the way business gets done,
Okay.
but I don't think it's going to shut down. And the fact that, Manhattan, I think, is probably the hardest hit borough out of all.
Yeah.
But even I think that as, painful and as hard hit Manhattan has been hit, people are coming back.
Yeah.
Every week, it's a slow process, as it should be. Because besides the pandemic, there was some social unrest and looting and everything else.
Right.
People are slowly starting to come back.
Yeah.
When it comes to, the different commercial real estate verticals, I think there will be, like I mentioned, a fundamental shift where, things are going to pivot and turn. I think that during the pandemic, a lot of, Fortune 500 companies who are the largest tenants, in Manhattan, they did see a different way of doing business, where having, remote teams could be, economically feasible. Do I think that will wipe out the commercial office market? I do not.
Okay.
I think it's going to hit certain landlords more than others. Obviously, if you have, a 1 million square foot building and, one of your Fortune 500 companies leaves and vacates 60% of it, it's going to be painful.
So let's talk about that. Yeah. So now, are we seeing a markdown in the prices? Because you said some deals are happening for like a good price, right? Deals are closing. It's like a bargain price. But now, are we seeing that 50% markdown in the prices for commercial retail spaces or office buildings?
So office and retail, I'm going to actually split those up.
Okay.
Office is slowly building some traction. Look at the headlines, right? Facebook just took 1 million square feet in the city. Other companies are moving in. Yes, certain larger companies are outsourcing part of their work to team members that are working from home.
Mhm.
There was actually an article, I think, in the Wall Street Journal today, how a lot of the financial services are all telling their employees, it's time to get back to work. and time to come back to the offices.
Yep. Yep.
Yes, people will work from, will downsize and take smaller spaces as opposed to larger spaces and so forth, but I still think there's a demand. I do not see a 50% drop in prices.
Yeah.
I think landlords are trying to be more accommodative, to help their tenants kind of get by. And I give, a lot of kudos to commercial property owners, to commercial lenders, who all, for the most part, try to do the right thing and accommodate borrowers and tenants and so forth. Retail is a little bit of a different segment. I think the pandemic kind of helped bring certain things to light. I think retail has been, kind of on the downward trajectory for a while now. It's something like to call the Amazon effect.
Yeah.
And, it's actually a very, very real thing where, even lenders who are dealing in the retail space, some of the, the litmus tests and the way they're evaluating deals is, how's Amazon going to affect this business?
Yep.
Those are real, you
got to Amazon proof your business. Yeah.
Credit questions that are being asked.
Right.
And listen, it's obviously, if you're a direct competitor and your business is going down the drain, it's going to be very difficult.
Sure.
However, on the flip side, for owner-occupant businesses, listen, there's a ton of essential businesses, from the pharmacies that will utilize retail space, from we have, department store clients that are in the home goods space that are doing extremely well this year, and they're expanding, they're growing. I think it's going to be a fundamental shift, the same thing that's, it's been going on with the enclosed mall space. It's who's going to have the most creative strategy, how to reposition, how to, pivot, and how to reutilize space.
Yeah. Let's talk a little bit about forbearances and moratoriums and how those work. Because I think the confusion comes in where people believe that a moratorium somehow opens the door to like a forgiveness of a debt. And that's not the case. From what I know and everything that I've been reading about it, and learning about it, is that it puts it off, but it doesn't forgive, right? So how does that work? And let's talk about the forbearances first, right? And then we'll get to the moratoriums. How do people negotiate their way back into a forbearance or try to start making payments towards the outstanding debt? How do people navigate around with the forbearance?
Sure. That's a great question. So on the commercial side, which is different than the residential, every particular lender really took it upon themselves how to structure different forbearances. Some lenders just literally put a freeze in time for 90 days, and you kind of pick up, and they added the deferred 3 months of payments onto the back of the loan, or extended the maturity of the loan by that proportionate period of time.
Rates or no rates?
I'm sorry?
Rates or no rates? They throw points?
Oh, no, everything is the same with the same rate. Just if your loan was coming due, October 1st, now it's due January 1st.
Okay.
Everything got moved out 90 days.
Okay.
Some lenders took those same 90 days of payments, 3 months of payments, and broke it down in equal installments over the next 12 months.
Okay.
So for example, let's say you owe them the extra $12,000. You owe them $1,000 on top of your regular monthly payment for the next 12 months.
Okay.
Some lenders broke it down over 2 years, right? It's very, very kind of specific lender by lender.
Yep.
And in addition to that, some lenders took COVID reserves. Moving forward for new loans, all lenders, instead of all, let's say majority of the lenders are requesting COVID reserves.
What is that? What is a COVID reserve?
So COVID reserves are banks at time of originating a new loan are requesting anywhere from 6 to 12 months of payments to be held in escrow for up to a year, sometimes 2 years, to make sure that if there is another shutdown, if there is another wave, that the borrowers will not be in a position of financial hardship where they would have to kind of rely on the bank for forbearance. That money will be there to make the payments on time.
Huh. Wow. Yeah.
Yeah, it's standard, new post-COVID standard commercial lending.
Yeah. Wow. How long has that been in effect?
May.
Okay. Yeah, I've never heard of that. See, education right there. That's education right there. So how do people respond to that when they hear that?
For the most part, it's We haven't seen a lot of pushback on it. For the most part, it's predominantly, when can I get my money back? Not that I have to put it in.
Right, right.
But for the most part, borrowers are very understanding of it.
Yeah, but it's not making money. It's just sitting in an escrow.
It's not making money.
Yeah.
But that's, that in my experience, what we've been seeing thus far is not really a negotiable factor.
Okay.
Because the lenders are afraid that, another wave of anything,
Yeah.
we shut down again, banks are not going to be in a position to keep floating the money.
Right. Got it. Okay. So I got a bit of an understanding of how the forbearance works. Just let's break it down a little bit further though, right? Can somebody stay in forbearance, or a landlord with, more than 10 doors or whatever it is, bigger units, can they stay in a forbearance until 2021, maybe mid 2021, till they start making a little bit of money? Because what's happening now, I think, and in both in office buildings and in residential buildings, bigger units, bigger buildings, people are not paying rent. They just don't have the money to pay the rent. So it's like, where are the landlords supposed to get this money to cover their mortgages?
Well,
Right.
so I mean, that's I would say that's a little bit yes, a little bit no.
Okay.
If you take a look at statistical data, I think rent collections on a national level, this is predominantly more in the multifamily sector, high 80%.
Okay.
So, compared to the same period of time last year, if we were at 82% today, we were at 92% last year.
Okay.
So there's been a 10% drop off, which is not that drastic, obviously taking into account everything that we've been through.
Right.
For, longer forbearances over, 3 to 6 months, I'm sure that is very, very much a case by case basis.
Okay.
Like there has to be, very much, extraneous circumstances for a lender to, at least from what I've been seeing, for lenders to really go out on a limb for that long period of time.
Okay.
Lenders are reasonable, 3 months, 6 months, but usually my experience, once you start going over 6 months, that's when the roads get kind of choppy.
Yeah.
And that's we've been kind of discussing it with a lot of our clients for the last several months. Is March, April, May, June, July, these were kind of very fluid months where things were happening and things were changing daily. But it was always been our position that in September, October, November, December, that's when things are really going to kind of start splitting.
Okay.
Where the stronger borrowers, that maybe even the stronger borrowers that needed a 90-day forbearance or whatever the case is, they have people coming back in the doors, people are starting to work, people are starting to pay the rent and kind of go into back in the swing of things. Now, rent could be 50% of the rent, 70% of the rent, 80% of the rent, right? All landlords have been forthcoming to make accommodations to get their tenants back.
Right.
But it's always been our position that the longer this goes and the longer that borrowers are in forbearance, or trying to be in forbearance, I think that's when the market's going to split. And I think a lot of the stronger borrowers with more, stabilized properties, they're going to swim.
Right.
And I think the guys that are, who haven't received the rent check in the last 9 months, I think those are the guys that are going to drown.
Gotcha. Okay, that makes sense. Where are you spending most of your energy since the pandemic started? Is it with office buildings, or is it more big unit landlords? Big.
You know what? So far, we've been pretty diversified. We're getting pretty, I'd say equal requests. We are seeing a lot of owner-occupied stuff, so a lot of healthcare. We are doing a lot of office, and we're talking about predominantly, we've been seeing a lot of Class A medical office.
Yeah.
Though that's every bank's, wish.
Yeah.
You have a building full of doctors during COVID. Everyone needs a doctor. Everyone's paying the bills.
Right.
We're seeing a very good amount of multifamily, so Class A multis.
Okay.
Industrial here and there, but a surprise, which I personally think, in this vertical of commercial real estate really came out swinging, is construction.
Construction.
They're built in New York City. They're
Yeah.
building New York City one after the other. And, we probably have over 10 construction loan requests in the last probably 30 days.
In Brooklyn
Uh,
specifically?
Brooklyn, Queens, Staten Island, New Jersey, people are building.
Yeah.
People are building, and it's kind of funny. So, a lot of developers didn't wait for COVID to end. A lot of them went for special permits and started building in May and June. And
Yeah.
some even started in April.
Yeah.
That these guys are just plowing through. And, we had some initial discussions with these developers, who were, for example, who were doing condominium units. We thought maybe it might make sense for them to consider as rentals, which we did do for several of these, developers.
Uh-huh.
And you'd be surprised. Halfway through, they're like, listen, the market's there. We're going to stay with condos.
Nice.
The markets are there. We've recently had, a lot of market studies done,
Uh-huh.
in major markets all the way from the Clinton Hills of the world to Staten Island,
Right.
different parts of the city, Ditmas Park, Sheepshead Bay, kind of run the gamut. And the absorption rates for product is there.
Yeah.
Prices didn't take a hit. Again, I will kind of exclude Manhattan for the instance for now.
Yeah, sure.
Because I think there's much more of a social dynamic there.
Right. Yeah.
But the outer boroughs are pumping.
Yeah.
People are building. There's huge demand for it. Price points, if you think have dropped off, they have not.
Yeah.
And people are swallowing these units.
So compared to last year, right? Would you say you've seen more activity in development, or would you say because in the beginning of COVID, I think everything stopped. Even development stopped for a while.
Of course.
Construction stopped for a while.
Yeah,
So I
absolutely.
think these guys already had skin in the game before COVID. So it's like they had to complete the project because they're already in, right?
Sure.
So it's like,
Sure.
okay, not only can do we have to complete it, we got to make it better now, right? But we got to try to meet an immediate need for potential tenants or office, whatever it's going to be. I've noticed though that the commercial spaces that were going to have retail, like on the first floor, those kind of stopped, right? Because it's like, how do you identify potential retail customers, or potential retail tenants?
So I wouldn't say they stopped, though. That is the major kind of stumbling block for a lot of new construction, residential buildings, where the retail spaces there's just not a lot of tenants right now. The only segment of the quote unquote commercial retail is the community facility space.
Okay.
Where in New York, if you're building in the right zoning area, community facility could actually give you some additional FAR, additional buildable square footage.
Sure.
Now, obviously, community facility is restrictive use, something to enhance and better the community. Those types of properties are actually doing quite well because they're the heavy users are usually doctors, daycares. Those are the ones doing well.
Right.
But retail, even in the new construction stuff, like in the others, is the one that's still kind of hurting, and that's a pain point.
Yeah, makes sense.
That's definitely a pain point.
Yeah, it was struggling before the pandemic, right? Retail was struggling before the pandemic, so the pandemic kind of accelerated that whole process, right? And you see
it absolutely. And now I think what pre-pandemic, retail spaces were still very hard hit.
Yeah.
But I think in very desirable geographic locations, they were doing fine.
Yeah.
What changed now is that even those desirable geographic locations are hurting like everyone else.
Mm-hmm. Why is that?
Because retail, whether restaurants or stores and everyone else, they are very cautious because of the pandemic, and to see how their business internally will do before they go out and start signing expensive leases.
Yeah, that makes sense. And with the other part of it that's crazy too when it comes to commercial is like after you have, I think maybe your first or is it the third year, the landlord usually raises your rates based on your performance and your activity, right?
So now there's 3%. The kind of the industry standard is 3%. to 4% annual escalations.
Right. So now are they going to reevaluate that now? Is that something that's up for discussion?
Listen, in today's world, in retail, everything's up for discussion.
Good.
You know what I mean?
Yeah, yeah.
It's kind of that's fully in the driver's seat are the tenants.
Right.
If it's a good, strong tenant, then landlords will be very, very accommodative to you.
Right. So let's make a deal, right? Okay.
Absolutely.
Now we're in election year right now, and we're kind of like there's three sides to a coin, right? There's the edge, there's the fence sitters, there's the undecideds, the people who don't know what to do right now, right? Because of what's going on. It's an election year,
Sure.
right? Do you think that people are going to hold off, or you're going to get more activity after the election when it comes to commercial? Because people want to see what the rates are going to do. They want to see who wants to get into the White House. Do you anticipate that people would sit on the fence and wait before they go ahead and jump into an investment opportunity, whether it's in the multi-unit space or the office building space, to like scale out their businesses?
Sure. So I don't know. I'm sure there's a segment of the market that is doing that, but it's not something that I really foresee happening that much. I'm sure that it's a lot more impactful on a very large scale. When you're talking about the Tishman Spires and the Extels of the world and so forth. Mm-hmm. But on the smaller scale, I don't think so. I think the Federal Reserve is not ultimately. I don't think whoever wins. I don't think the Federal Reserve is really going to take their foot off the gas.
Right.
Because I think if they do, it's going to lead to a much broader uncoupling of the economy.
Okay.
So I think that the Fed, I think Chairman Powell said it best when he spoke a couple of months ago, and mm-hmm. That's my new favorite tagline is, "We're not even thinking about raising rates."
Wow. Okay.
You know what I mean? So yeah. I think any Federal Reserve is going to be very mindful of that.
Right.
Especially where the unemployment numbers are, especially, and even though we had a fantastic unemployment report, right. Numbers are still astronomically high. There's always revisions. There's always seasonal adjustments. So I don't think that the Fed or the Treasury could afford to take the foot off the gas because they're the ones that are really, steam heading this recovery.
Right.
And if they slow down, then everything else will uncouple.
What do you think? So I asked you that question so I can kind of segue into the next question, which is what do you think the recovery timeline looks like? If it's not going to be, is it going to be similar to 2008, or do you think it'll be longer?
It's different. It's different, right? Because the economy was kind of firing at 50-year highs pre-COVID.
Okay.
Real statistical numbers. I think that, just looking at the jobs numbers, I think from 2009, where the unemployment level to kind of drop to, it took 27 months, I think that was the statistic, to get it down, to 8.8 to 8.5%. This time we did it in 2 months. I think it's different, but I also think that in 2008 and 2009, which I lived through in my professional career,
yep.
It was very kind of clear cut and straightforward.
Okay.
The world just uncoupled and everything fell apart and that was it.
Yeah.
And everyone knew what was going on. I think that the biggest hesitation that I see now is that it's very much unforeseen and unpredictable. You know what I mean? A lot of things are driving on, a vaccine.
Right.
A lot of industries are banking on that. Right. And that will, and the vaccine, I think, is kind of the ultimate pillar, because that's going to overflow, right? People get vaccines, people feel more comfortable, they're going to start traveling.
Well, you got more doctors opening up offices, you say. So it's a particular space. It's like the healthcare industry is like those are the guys that are getting a lot of the spaces that you're talking about, the commercial.
Absolutely.
Spaces, right? So there must be something that they foresee, whether it's the vaccine or.
I think with doctors, it's different. Doctors make money when it's good.
Yeah.
Doctors make money when it's bad.
Always necessary.
Right?
Yeah.
Always necessary. So they're kind of the ultimate immune asset vertical, right?
Right.
They're always going to be around, and no one's going to kind of, knock them off the axis.
Right.
I was referring to more of the large scale businesses.
Okay.
So I think why I said it all boils down to the vaccine, because if the vaccine is there and people are able to get it,
yeah,
I think that will do multiple different folds, such as, the travel industry will slowly come back.
Right.
Once the travel industry comes back, then guess what? The hotels are back, Airbnb's back, the airlines are back.
Right.
If there is a vaccine, people are going to be more forthcoming to send their kids to school, which means people who have to stay home can't go to the office because they need to watch their kids. Now you push that end of the spectrum into the work pool. You push those people back to the office. And I think that with the vaccine, there's also going to be a huge, when it's safe and there's enough people that could get it, I think there'll be a huge return to office.
Huh.
Yes, I'm sure a lot of the back office operations could work from home, remote. Yes, all that kind of stuff we understand.
Yeah.
But in the greater scheme of things, all those Fifth Avenue office towers, I think that if there's a safe way for people to come back, and I don't think that's there yet, even with the, with the temperature checks and everything else, and social distancing, I think that's still a very, very big deterrent.
Yeah.
And I think what's even more so is not even the, physical occupancy of office space, which is a major deterrent. I think it's more so about the commute.
Yeah.
People are still afraid to take public transportation. People are, still afraid to do this, that, and the other.
Right. I think, what's funny too is a lot of businesses are seeing that to have square footage now, to have an actual office, is overhead that they don't need. It's unnecessary overhead. And a lot of people can do business from home now. So, I mean, that traveling, saving money on traveling, and even though gas is cheap right now, but still it's the time that it takes to travel from one location to another. Right. I also, and just like me personally, I think when I hear about the vaccine, there's going to be a lot of people protesting and rioting again. There's going to be people who don't want to do it. But I think at the end of the day, what you're going to have is you're going to have some people who are going to choose to do it and some people who are going to choose not to do it. Right.
Sure.
The other thing I'm thinking about now is like an opportune time, and I'm a little hopeful and thinking that it's an opportune time to bridge this wealth gap on so many different levels. New York is not going to drop their property tax. It's expensive to live in New York. It's expensive to have property in New York. Whether you're in an office building, whether you're in a multi-unit building, it's expensive. Property taxes are going to be what they are. So how do we, and what sectors do you think people are transitioning right now from like unemployment to finding employment and transferring their skills? What do you think would be a good, I guess, for us to bridge this gap, this wealth gap, right? If somebody like me wants to be able to get funding from the government to start an initiative where I'm going to need a commercial space, right? What do you think would be a good way for me to get into that as far as money-wise or credit or partnerships? Syndicates, what do you think would be who are you approving right now? What are the guidelines like? What is the criteria for a lot of newer guys that are trying to bridge that wealth gap right now?
Sure. So I'll tell you like this. I think that the real big drivers and the big players in the owner user space is SBA. SBA, that's the name of the game. That's who's putting all the money out. And they already have all the money, right? It's the U.S. government.
Yeah.
SBA is being extremely, extremely accommodating to help small businesses sustain, grow, survive. 90% financing for owner-occupied purchases.
Wow.
For commercial. That's the game in town.
Yeah.
And that is what I see is what we mentioned earlier. What I see is the major driver for a lot of these small businesses, even the healthcare guys, even the attorneys and so forth. These are the guys that are using these types of products to be able to expand, and that's where ultimate financing comes in.
SBA. Okay. So what I'm asking you that because now I'm looking at a way for me to bridge that gap, right? And I want to start an initiative. I want to start a legacy initiative. And the idea behind it is for me to be able to create a STEM project where, we can have maybe centers, entrepreneurship training centers where people can have, and I'm talking about within the boroughs, you know, where maybe downtown Brooklyn, and then maybe somewhere in Jamaica Avenue in Queens, right? Maybe somewhere in Woodhaven, around Elmhurst area. And those areas there's a lot of activity, a lot of commercial activity.
Yes, sir.
And there's not a lot of opportunities for, you know, to become an entrepreneur today. It's easier than it was years ago.
Absolutely.
If we can train people and have a place where, you know, people can come and learn the STEM initiative, I would want to do something like that, but I'm not sure how to go about it, because I'm an individual. I'm not part of a syndicate, right?
Sure.
So this is more for me than anything else, right? What do you, okay, as far as the SBA is concerned, right? What do you think they look for in terms of to qualify as somebody who they would lend to, so I can get a space like that? I can get
Sure.
a retail space, maybe one of those new construction buildings or something.
Sure. So SBA, it's the unique thing with SBA. It's always been around, right? In the good times, people kind of look at more of the conventional financing, but SBA has always been the game in town.
Yeah.
And the whole point of SBA is to help initiate and drive and open small business growth. That's what they're there for.
Right.
So, you know, a good business plan, you know, with some financial projections.
Okay.
You know, how are you going to operate your business? Why are you going to operate your business? Where are you going to operate your business? You know, how are you going to do it? What's the secret sauce and so forth?
Right.
If you have a very tight kind of put together financial package,
Yeah.
with a good business plan, you'll be able to borrow from SBA.
Yeah. Okay.
But besides SBA, there's also something called the Excelsior Fund, which is the New York State Fund,
Okay.
which is kind of the same concept, but from New York State, where SBA is federal.
Okay.
Where they help fund startup businesses.
Nice. Okay.
Plus, on top of that, of course, there's all of these, you know, New York City and state grants, nonprofits.
Yeah.
All of that
I
fun
want to
stuff
do a
as well.
for-profit. I'm so like inspired right now by like Akon and his social capitalism movement. So I'm like, yeah, I want to do something like that, but like in the communities where I know we can restore New York. You know what I mean?
I think it's magnificent. I think it's a magnificent, magnificent idea.
Yeah, I'm still trying to figure it out. Since we last spoke, you've done a partnership. You just recently partnered with Star Rock Associates, right?
Yes, sir.
Yeah, congratulations, man.
Thank you. Thank you.
It just like it looks like
very excited.
Just happened, right? Like pretty
Yeah,
recent.
it just happened a week ago.
Yeah.
Very excited. So Star Rock is a wonderful organization, very, very active investment sales brokerage. Very humbled to partner with those guys. And, you know, the premise of our partnership was to bring our strategic capital markets platform to their clients.
Okay.
So, you know, a lot of investment sales brokerages and sales houses have been working with us for, you know, for a while now to help accommodate their clients' needs. You know, we provide the expertise and the know-how of the commercial capital markets. We know how to structure deals, where to put them together. We have access to over 100 different lenders, from the national guys to the local guys to the conduits to the life insurance companies to the pension funds.
Nice.
And you know, the demand is there. You know, people are looking for creative strategy, and that's what we provide. So we're very excited about the partnership.
Yeah, that's amazing, man. Because you just literally, I feel like we just spoke yesterday, and it's like, here he is, he's partnered. You know, you're doing big things.
Thank you, sir.
It doesn't seem like you're scared at all. You don't seem to have any concern about what's going on as far as the commercial lending. To you, speaking to you, it's like you're okay. Like everything's gonna be fine. It sounds like.
Listen,
Right?
it's you know, I guess you could say it's the natural optimist in me.
Yeah.
But you know, I think that mindset is a very, very big thing in just your own human development.
Right.
And you know, I think that always, you know, throughout my career, I've always thought that, you know, if you put in the work and you do the right thing, you're going to get rewarded.
Yeah.
So, you know, I actually, where, you know, a lot of our competitors are actually laying people off, you know, I see it as an opportunity to grow.
Right.
I definitely see it as an opportunity to grow. I think there's demand. And I think if you do the business the right way, people are going to be there for you.
Love it. Love it. Where do you see things going, say, three years from now, Alex? Do you see us making a recovery? Do you see us, you know, coming back to how strong we were? Or Or do you think it'll take a little bit longer than that?
I think 3 years is a good number.
Yeah.
I think 3 years. I think 3 years is definitely a good number. I definitely think that is something that is very much achievable.
Yeah.
Something that's very, very realistic.
Yeah.
And I think that gives us, with the election, with the ramp up time and everything else, I think it really gives us the runway to kind of get on track and to really put everything together.
Love it. Love it. Thanks for explaining so much, man, and giving us, all this value right now. Is there anything else you kind of want to just leave us with? I know I took up a lot of your time.
No, not at all.
More education than anything else, right?
No, listen, it's my absolute pleasure. Thank you for having me back. Love the show. I love what you're doing with it.
Thank you.
My absolute pleasure, and I'm here to help any way I can. If you have any additional requests or questions, I'd love to do this again with you. Definitely. And just trying to do my little piece of giving back.
No, definitely. I learned a lot, Alex. Thanks for taking the time, my man.
My pleasure. Thank you so much.
Yep. This was the Bottom Line Podcast, where we say what we mean and we mean what we say, because at the core of everything that is, was, and forever will be, there will always be the bottom line.